What's up, guys? Welcome to Roensch Capital Charts. In this video, we're going to do a deep dive on Disney stock and try to pull out as much bias as we possibly can, utilizing a variety of sources like the volume profile. I want to take a look at psychological levels, where if tested, I expect we would see a lot of traders pouring in and taking positions. We'll take a look at the options bias as well as the expected move. So stay tuned for that at the end of the video. All of this to try to get as good of a grasp as possible on Disney stock for the entirety of April 2024, and then also looking toward the end of April 2024 in terms of expected move. So let's take a look here, starting on the 4-hour chart. You'll notice that my chart is incredibly simple, right? I have the gray line, that's the 200 period moving average, and the white line, that's the 50 period moving average. Now listen, there's a very good reason for that, right? I only want what has a lot of eyeballs. I believe that all TA is nothing more and nothing less than a self-fulfilling prophecy, and I wouldn't want it any other way. If it weren't that, I'd be out of a job. In the short term, I look at TA as purely psychology. Now, in the long term, over the course of years, right, fundamentals always take over, but in the short term, psychology is king. And this right here, this is the best insight into the psychology of the market that we have, the charts, right? Let's take a look. So you can see here over the course of the last month or so, at least as of the recording of this video, we have seen that 50 period, it's been holding, okay? But it's been a bit sloppy. We reclaimed it back in late February, okay? And we've held it ever since, essentially, as it was sloppy, right? But we've held it as a support level ever since. There, we saw a nice sloppy test. Here it cleaned up a little bit, but still took a couple of days to really shoot up out of the hole. Here's what I'm looking for throughout April. Bulls. Okay? When you're in ascending pattern like this, we have the 50 period that is more aggressively as of late moving upside. We have the stock pushing higher and higher, right? We're coming down to test the 50 period, and it's a little sloppy, right? But it's respecting it. You want to maintain that for as long as possible and really keep that 50 period as close to the stock price as possible. Ideally, I don't love to see huge pullaways. I mean, this is a month-to-month perspective, right? We're talking about the entirety of April. I don't love to see huge pullaways. If given the option, I would pick a slow, steady, but strong uptrend every day of the week where that 50 period stays close, because then we know that we see pretty consistent tests of the 50 period, especially on like the 4-hour chart, right? Then each test requires less backslide to satisfy itself. It's all psychology, right? The traders decide, listen, we're pulling away. Let's head down for a test, right? In simple terms, okay? So throughout April, listen, I would love to see that 50 period continue higher, claim 115, right? Head up, maybe even claim 120 before the month is up. All while the stock continues to grind higher, but stays above the 50 period, but never pulling away too far. I mean, we saw that occur after earnings in like early February, right? Earnings is a little bit of an exception, but you can see that, you know, eventually we took our time while that 50 period caught up. And I don't want to have to give that option where the 50 period has to catch up. I would prefer more so to just see it, you know, hang tight with the stock throughout the entirety of the month. You know, in all reality, it's also a much more healthy way for the stock to trade. Now, bears. You bears want to see that 50 period flatten out as early as possible and claim as few whole dollars as possible. Okay? Because what's your ultimate goal on the 4-hour if you're a bear? You want to see a high volume crack downside beneath the 50 period at some point through April and over the course of a few days. You would love to see a break downside, a retest of the 50 period, and then a hard, high volume rejection downside, which opens you up potentially for a downside test of 110 and or that 200 period moving average. All right, now let's move on here to the most heavily watched chart of all. That's going to be the daily. Now you can see here that the 50-day moving average is moving higher at a very quick pace. It recently reclaimed, or claimed more so, 105. Bulls obviously want to see that thing ascending as quickly as possible, claiming 110, maybe even 115 in the month of April. That would be beautiful. And by the way, if you're watching this later in the month, I think you're at actually a greater advantage because you have all this hindsight information to maybe even make better decisions than we can right now. But listen, that 50-day moving average, of course, on the daily chart, that is one of the most heavily watched indicators, if not on the planet. Okay, if that could reclaim 110, 115 while the stock stays even where it is or, grinds higher, that's a beautiful thing. But in terms of psychological levels, listen, in a stock price like Disney, each $5 increment is going to be a psychological level, with the $10 increments being slightly stronger, at least on average. So the levels that I'm watching for higher volume and potential position taking, that 120 area, 125, maybe even working our way up toward 130, right? Each increment is going to act as a potential resistance, at least to the upside, until the stock is able to reclaim it and hold above it for a couple of days likely and prove, okay, ideally on above average volume as much as possible, that, hey, we're going to hold this level here. See how that kind of happened here with 110, right? Happened as well with kind of like 105, that region. That's kind of what I'm looking for that slow grind higher with healthy breaks and holds. Now listen, bears, that 120, just where the stock currently happens to be as of the recording of this video, a nice rejection off 120, head down toward 115, break 115. That's a slightly weaker area than I would expect 110 to be. But understand to the bearish side that each $5 increment, and especially $10 increment, is likely to act as a psychological support level, at least potential support level. And to the downside, you're likely to see longs entering at each increment and shorts looking to enter upon the break of each increment. The same thing goes for the upside, just vice versa, right? You are likely to see some shorts entering ahead of each especially $10 increment, and some longs looking to buy or add upon the break and hold. Okay, this is very psychological. Now, implied volatility. This is very important. Okay. Not only does this help us gauge the health or the comfort level of the stock, but if you trade options, this is likely the culprit. Okay, you can see here. Actually, let's zoom in a little bit and be more contextual here. If we take a look compared to kind of like the beginning of 2024, the last 3-4 months, you can see here that IV is in the, I would say, mid to lower range. Okay, understand that the lower IV is, the more favorable conditions are to purchased contracts. All right, and the higher IV goes, of course, in comparison to your intended trade time frame, the higher the potential risk of IV crush. All right, now let's take a look at the volume profile here on the weekly chart. We zoom in a little bit, we can see since the beginning of 2024, all right, we've only had 3 red weeks. I mean, listen, the volume is kind of average, I would say, in comparison to the last couple of years. But here, guys, there's a very obvious bullish bias, not only in the price action, of course, the stock's up, right? That's obvious. But in the volume profile, which is kind of another layer of the onion as we peel it back, there is a rather obvious bullish bias in there as well. On those 3 red weeks, we didn't see outsized volume at all. It was actually relatively average volume, and we're seeing an outsized number of green weeks as the stock pushes higher and higher. The next earnings report is on May 8th after the market closes, so nothing to worry about in terms of earnings throughout April. Now, let's take a look at the options bias. Okay, this is the bias out of the chain. This is the put-call ratio since the beginning of 2024. 1.0, all right, is an equal open interest for both puts and calls. Lower than 1 starts to show a call side bias. Higher than 1 shows a put side bias. The put call ratio on Disney has pushed higher, right? It started the year at like 0.64, somewhere in that region. It pushed as high as 0.85 and has since faded, currently sitting at 0.79. So understand that we are seeing a call side bias in terms of open interest currently on Disney stock. Now, last thing we need to take a look here to kind of wrap this all up. Expected move. Okay, that's a technical term. It's actually priced from the actual market participants in implied volatility with each particular expiration. So if we look at the last expiration in April 26th, and we go over to the expected move, it's plus or minus $7.08 per share. All right. And if we head over to, let's look at this on the daily chart. That basically tells us that by close on April 26th, near the end of April, the options traders believe that Disney's going to be as high as about 126, 127, or as low as about 112. Now, understand that by design, the expected move does not contain a directional bias. It's a volatility expectation, which is kind of like the missing piece that we need to really make our own decision. Right? That volatility expectation coupled with the directional bias that we can pull out of the market by looking at the volume profile, the put-call ratio, psychological levels where we expect traders to enter and exit. When we put those two together, it becomes very powerful. Because not only can you form your directional bias, but you can then look, especially if you're trading options, you can then look at the expected volatility and say, okay, do I think expected volatility is going to be higher or lower than what the market expects? And then you can use that information to position yourself for the best possible chance of benefit. Listen, if you got some value out of this video, I'd greatly appreciate it if you subscribe to the channel. If you're looking for a bit of additional guidance, take a look at those Platinum one-on-one memberships at the link in the pinned comment. I'm working with my Platinum members every single day, along with Gold, Gold Plus, and Gold Plus UOA members. They all get, along with Platinum, scalp setup alerts, in-place stock alerts, depending on the membership level, swing trade setup alerts as they come, human verified unusual options activity. That link in the pinned comment, that'll let you get grandfathered in at the current rate. I'll see you inside. I appreciate it, and I'll see you in the next one.